Hi, this is Francine, and I'm here at Table Talk 805. We're here at BG's Cafe in downtown Oxnard, and today we're going to talk to you about Obamacare. The scary, scary Obamacare that's coming, all the changes you could expect. And we're here with Henry from TrueLight Insurance, and he's going to talk to us today about the Obamacare, what you need to do, how to sign up, and what you should look for so you're not a victim of fraud or any kind of scams. Thanks for being here.
Thank you, it's great.
So, how much time have you spent learning about Obamacare?
Easily over 200 hours. Since 2010, when it first passed, we started learning about it, and as it's progressed, we found at times it would change every week. So we weren't behind the changes learning it, which most brokers didn't want to bother with it. It was hard to understand. So it's hard to understand how somebody could just go in right now, think the website will teach them when there is so much to know about it.
Now, when they go to the website, it looks simple enough, but then what would they do? I mean, would it...
Well, here's a problem, and this did happen to a family member of mine here in the area, where somebody helped him just find a plan, and he thought he did everything correctly. He got a letter, and they need more information, but it's not very clear what the information is. When they come to my office, the clients, I've learned what questions to ask, because, for instance, income. They'll use their last year's taxes on there. That's not entirely correct, because besides that, if anybody else is living in that house that's not part of those taxes, their income is included in the income for the house, and so that can change the subsidy. Unfortunately for some, they may get a subsidy that'll pay for the majority of their health insurance. At the end of the year, when it balances out with how much income came into the household, they may have to pay a lot of that money back, and they don't realize it.
Now, I thought Obamacare was supposed to help alleviate those kinds of costs, hidden costs, so that everyone can have access to quality medical.
Yes, and here's the thing, is with any government plan, if you are doing everything correctly the way the law states, it can help you. I say can, because I have helped several clients already, where, I had a lady paying over $700 a month, hers dropped to $350. It helped her. So if you're doing everything correctly, if you're not, in this area, it's difficult for a family to be able to just rent on their own. A lot of times they'll have somebody else living with them. In those cases, that's where they get into trouble. But there are many instances where people don't realize if their employer is offering coverage and the employee has to pay the majority of the family part of it, they're automatically disqualified from any subsidy. And they don't realize, they put in there that they're not offered coverage because they declined the coverage, and at the end of the year, it'll come back that they qualified for zero subsidy.
Now, what about, larger family, like Hispanic families? You have grandma living with you, an aunt living with you, a cousin living with you. Everybody puts in the pot, but it's still not enough. And maybe they have some little cheapy insurance through work that doesn't cover much. How would those families get affected by Obamacare?
Well, those families, in certain cases where some of the members may not be a dependent, so they may qualify for a program. However, again, if all of them are chipping in money, then it would all depend if it's grandma that's living there, part of her subsidy would come from the incomes of everybody else, even if they're not part of it. One of the great instances, we have my father-in-law living with me. Mm-hmm. He's 81 years old. He's disabled, and so he's on Medi-Cal. The ones that have Medi-Cal, normally that have been approved these last few months, they're staying on Medi-Cal.
Okay.
Those from healthy families that got approved for Medi-Cal for the new year, they stay on it.
Okay.
And now it's just the rest of the family to see if they qualify for the subsidy or not. Unfortunately, if somebody doesn't have a valid Social Security number, they qualify for zero subsidy. So we're told you have access to the plan, And that's where it was sold. You have access, and it sounded great, but never did they say the government's going to pay for it.
Yeah.
So they would pay the entire amount. They qualify for zero subsidy, and I've seen them getting kicked off of the ACE programs ending, and other ones are ending, so they're going to find themselves in a lot of trouble.
Now, the other problem is people that already have Medi-Cal. You know, a lot of people are complaining, well, how does this affect me? What do I do? Is this going to change where I go to the doctor now? Because the problem was a lot of doctors stopped building Medi-Cal, stopped building Gold Coast. They stopped building the whole thing. They were like, we're done with it.
Right.
Will it change for Obamacare? Will these companies come back?
They may. It depends on the actual the doctor. We're finding many doctors are closing up shop.
Yeah.
They cannot afford to continue for various reasons. With the new law, imagine you go to the doctor and every diagnosis has a code. Presently, there are 14,000 codes that are being used roughly. That number is going up to 180,000 codes come day after tomorrow.
Yeah.
So these doctors, these offices that are running it and that are barely making it, they now have to switch to a whole new system. They now have to actually probably contract people to come and do the billing for them now. So their cost or overhead goes up. Their reimbursement for Medi-Cal is, from what we've heard, it looks like it may decrease. So the doctors are saying, I can't do it. So you're finding many of them closing down, maybe moving into groups, into Kaiser, into different ones that are already established so they can just go in and be doctors. Who it hurts are your nurse practitioners and those that were part of that office, because they may not be able to move the way the doctors
Go with
have
them.
the option to, maybe.
Now, you know, that happened to our pediatrician. She had her own practice. She took on the Healthy Families and all those programs, wasn't making it, closed up shop, got with another group of doctors. It didn't quite work out. Now she's with a group that, you know, and now she's just a doctor. And the services are just minimal now, you know, so the doctors are practicing, but what I have access to is
Has
slim
been
to none.
minimized. Right, has been minimized. And the reason why is because the overhead costs, if anything, have gone up. The reimbursements have gone down. And with insurance companies now, they're being regulated how much goes towards paying the bills and how much overhead that they can have. So the insurance companies have to cut their overhead, because before they used to be able to have an X percentage, whatever amount they would use to have their offices, their staffs, and everything else. That now got cut by several percentage points. And you know, to reimburse the doctors, but we've seen the prices go up because everything's going up. But your doctors are closing or minimizing what they can do. It's because they can no longer afford to provide those services for the copay that you give and the reimbursement they receive.
Now, what about dental and vision? That's always been kind of a controversial thing because that's a secondary thing. You know, everyone's just concerned with going to the doctor. No one really thinks dental or vision, and so many of those places are either closing shop or they're not coming on board.
Right, and here's the thing with the Obamacare when it comes to dental and vision. For children under age 19, it's automatically part of their plan. If they get in, they get a dental plan and they get a vision plan. The adults, no, we have to buy it individually, but we're seeing a lot of them, they're closing shop, but it's really not affecting them as much because this whole Affordable Care Act doesn't talk, dental and vision are not part of it. I've sold several dental plans recently because people tend to see dental as more something you would use than even medical. Because most people that are not sick, that don't go to the doctor, maybe once a year, if that, they're paying $300, $400, $500, up to $1,000 a month for a plan they're not even using. For a dental plan, they will, once you hit a certain age, you are going to be visiting the dentist 2 to 3 times a year, if anything, for the cleanings.
Yeah.
So at least you see you're paying $35 instead of $300, and you're utilizing it. And normally with most dental plans, the checkups, the simple cleanings, and I was very specific on that, it's a simple cleaning. Be careful when a dentist tells you you need a deep cleaning and you think it's covered 100%. It's not. It's a simple cleaning. That's why you need to have a dentist that communicates very well with you.
Now, with the coverage, a lot of times there's a lot of exclusions.
Yes.
Certain cavities, things like that. How can someone who's not really sure make sure they got all the coverage they need without breaking the bank?
Right, and that's where a broker comes in. Like myself, I spent one whole year learning. After I learned the medical, I wanted to learn the ancillary products, which are your dental, vision, life insurances, group life, the supplementals like Aflac, Colonial, those kind of things. And so normally I will sit with a client and just start talking with them, just like we're talking. And from that, I'm gathering information. And normally, if I'm going to sell to a group, I can let them know. 3 people or more, it's a group when it comes to a company. I can get them a plan where your root canals are covered at 80%. You know, the oral surgery is 80% because normally the simple things, it's going to be very little out of pocket you're going to pay. When I say very little, for some it's still a lot of money, it's still $100. But a root canal, if you pay the whole thing out of your pocket, that's $2,000 once you pay the whole thing, including the crown.
Yeah.
And so what I do is I talk to the people, find out, do you have issues? If someone hasn't had dental in several years and they got to go to the dentist, then I know. I'm going to put you into an HMO. The amount of dentists you can go to is very limited, but it doesn't have a maximum amount that's covered for the year, because all dental plans have a maximum for the year.
Cap out.
Right, it caps out. And an HMO doesn't. An HMO also doesn't have waiting periods like you would have with your regular ones. Normal is 6 months waiting period for cavities or anything like that. 1 year for anything major. That's normal for an individual plan. A group plan, we can get it different. But I would find out if you need an HMO or a PPO, and then I'll help that person find the dentist that they would want. So that's the difference on working with the broker or going on your own. On your own, you're looking at price, the benefits look fine, but you don't realize what it excludes or how it pays or what actually is part of it. And that's the advantage of being a broker.
Okay, well, we'll stop right there. And if you want more information on this show, you're welcome to email me directly at tabletalk805@gmail.com, or you could go to Facebook.com/tabletalk805 and watch this show. And we will be right back after this quick commercial. And we're back. Again, if you would like more information on this show, you can email me directly, tabletalk805@gmail.com, or you can go to my Facebook page at Facebook.com/tabletalk805, or you can feel free to contact Henry directly. And your number, Henry?
Yeah, my number is area code 805-814-1599. And if you'd like to come and see me, my office is just down the street for you from BG's, 141 South A Street. It's in the Civic Center Professional Building, and it's under the H&L Salas Business Services. You go in there, my office is in there. I share the office with my wife.
Now, a lot of people don't want the Obamacare. They're just resistant. They're
Right.
like, I have insurance, I'm fine, or they're just stubborn. What's going to happen to them when the transition happens, when it all goes down?
Well, normally if they have a plan right now, then they will have gotten something in the mail from the carrier letting them know that if it's an approved plan or not. If it is not a plan that meets the requirements, then at the end of 2014, when they file their taxes, they will receive a penalty. Now, initially, it's been said that it's minimal. $265 for a family maximum, or I'm sorry, $265 or 1%, and that's the part that gets thrown under that people don't really focus on, is that 1%. If you make $50,000 for the year, 1% is $500. It's not $265. But every year from there, it goes up. By the third year, the penalty is in the thousands. So the government really is serious about taking a look at this. If someone has questions, because I've had some come in, and I take the time to sit with them and really look at the policy they have and their options coming up for the year. If what they have is better, stay with what you have. I'm not here to really just pull in the money. don't get me wrong, we work off commission.
Okay.
And I get paid by the insurance carriers. I don't receive any more money if someone comes through me versus going on the website. It is the same price. If somebody buys outside of covered California, it's the same price. So going with a broker, it's actually to their benefit because I can look on there to find out, is the doctor you're looking for in that network? You know, are you better off being outside of covered California, inside of covered California? Stay with what you have. Whatever it is, I will let you know the best one because at the end of the day, I'm the one you're going to see at the Vons,
Right.
at any of these supermarkets or in the store, and I got to be able to look at you with a smile and be able to greet you.
Now, what about these families that, a couple of them have social security numbers, a couple of them don't? How is that going to affect those people that are kind of mixed like that?
The mix, the ones that do have a social security number, they would qualify. We still enter the information on the other ones as well because they are part of the household. And it just, at the end of the application, it will show me on there what people do not qualify for any subsidies or any plans, and then which ones do qualify. If they qualify for Medi-Cal, they will receive information in the mail. I'm not the one that actually register for Medi-Cal. They do that separately.
Now, how would that work? Let's say a family who isn't documented that may be getting insurance from somewhere, and now they're not because of the whole Obamacare. Now, can they buy a private plan, or how would that work?
Yes, they can buy a private plan outside of covered California. And so they have access to any of the plans outside.
Okay.
Even through covered California, they can. I don't see the benefit of doing it. There's no difference in price. Because realize, when you go through covered California, you're now giving all your information, all of it, to the IRS, to the INS, to everybody. Outside, the companies don't ask for the Social Security number. So many have that ITIN number, ITIN, that they use, and the companies will use that number because all they need is a way to identify the person. So they can still buy that way.
Because it's not like there's one Jose Perez in the world, or yeah.
Right, there might be two.
Yeah, there might be two. Now, families who maybe have Medi-Cal but want something more, say, you know what, I'm not happy with this. I only get Medi-Cal. What more can I do? Because this just sucks.
Right. If they qualify for Medi-Cal through Covered California, they do not have the option to buy something else through Covered California. In that case, then you go outside of Covered California, and we go to the market. We can go to your Anthem, your Blue Shield, your Kaiser. And right now, Cigna has pulled back for 2014, but they're one of the carriers that we'll be able to sell as well.
Now, what about small businesses? The guy who owns maybe a small bakery or like this, a small restaurant has a couple of employees. How is that going to affect them? Because most of these places are just making it maybe a small profit, little cushion, but not really enough to cover everyone, to share a cost of plan. How will that work?
Well, they have the option, and normally what I will do is I'll evaluate, because I had that a few weeks ago with a client of mine in Covina. He wanted to provide insurance for his employees, but he made it very clear, I cannot pay for the dependents. In a case like that, I will let him know it's best for you not to do it, because automatically, if you will not cover the dependents, your employees qualify for zero subsidy for the dependents, because they are declining the employer plan. Now, if the employer just has one other husband and wife and one W-2 employee that works full-time, over 30 hours, they can get a group plan to cover that.
Okay.
Husband and wife is no longer considered a group plan, even if they own a company. It's no longer considered it. So you have to have one W-2 employee. It could be your son or daughter. As long as they're over 18 years old, they are an employee on W-2 working more than 30 hours, you can get a group plan, and we sell those.
Now, what about people that are home-based business or something like that, that have their own little, let's say they sell Avon or they sell something out of their home, Tupperware. How would they get covered? Because they're a home business.
Right. If they, again, as long as they have a business license and one W-2 employee, they qualify as a group. On their own business, then what they do is they would have to buy an individual plan. They no longer qualify for any of, even if they're a business. They are now considered an individual. And so they would have to do it that way. Now, if they're a corporation, they set up a small S corp, and they need the write-off for the corporation, that's fine. The corporation can pay for their coverage. It'll automatically go on the W-2 though.
I see. Now, when someone gets their coverage and they say, you know what, I'm not really happy with it, I want more, or I need to supplement something, can they do that? So let's say they got covered California through medical. They say, you know what, this vision sucks. I'm not happy, I can't get into the eye doctor I want. It doesn't cover my glasses, doesn't cover my contacts. Can they supplement outside for that? Or do they have to do the whole thing?
No, absolutely. See, the adults for Covered California, all they buy is a medical. And then on the outside, I can sell them several dental plans, I say several because I can sell them a dental plan from several different carriers. Same with the vision plans also. You can buy the vision plan outside of Covered California, which will come anywhere, I would say $9 to $15 a month or something like that. So you can supplement. Also, you can buy an individual Affleck type of plan that works a little different. And with all these, I explain to the person how it'll benefit them, or if they're just throwing the money away, why do it? So we go through all that.
Now, what about families that have kids in college? They're between 18 and 25, they're in school. How does that affect them? Because, Medi-Cal's only till 19, the kids are away at school. How would a family cover them?
Well, the family, you see, with the Affordable Care Act, one of the selling points was the kids can be on their plan until they're 26 years old. Here's a catch to it starting 2014. They can still stay on the plan until they're 26 years old. However, they now get rated as an adult. Where before, from 2013 on back, you had a family and you had a family rate, whether you had 2 children, 3 children, it was normal. 2013 started to change on some of the companies. Now 2014, every adult over the age of 21 is rated separately on the line item. And then after that, the next 3 children. So if you have a family of 6 children, 3 of them are over 21 years old, you will pay an individual price for every child on there. And at the end of at the bottom line, it may be a very high price. It can be on the parent's plan. And the only advantage to doing that, because they can go on their own and get the same price, but the only advantage is there is something called a family deductible, where if the family hits that amount, then their deductible is covered for the year, be it $3,000, $5,000, whatever it is. That's the only advantage, because once you do individual, you have your own individual deductible.
Now, what about families, because a lot of this is income-based. So you have a family that makes pretty good income, but they don't really have a lot of money. They make $80,000, $90,000 a year, but after the house payment, after the bills, after everything, there's not really a lot to go around. So how would a family qualify? Because, when you look at the W-2, you're like, wow, I make a lot of money. But what actually goes in my pocket, it's a whole nother story.
Right, and those are the ones that are getting hurt by this, because they find that they qualify for next to no subsidy, and there's nothing they can do about it. They will pay the whole price for it or go without insurance, because they won't find a program that will help them. So those are the ones that are getting a lot of those are getting hurt, and I've seen some of those in my office. And I had a lady leaving almost crying, because again, they made a decent amount, but their expenses at the end of the month, they didn't have a lot of money left over to pay for insurance. She was on an ACE program. Well, it's going to terminate.
Yeah.
She has cancer.
So what happens to families like that? She's in the middle of something. Her program's going to end. Will it cover her till the end of her treatment, or
No.
she's just too bad, so sad?
She's out of luck.
Okay. So what happens if someone's in the middle of treatment or they're in the middle of something? Then what happens to them? They were covered, and now, they're halfway through chemo or halfway through, their AIDS treatment or whatever it is, and now that program's gone.
Yeah, for a lot of them, they're somewhat out of luck if they cannot buy an insurance plan. Where I had a lady in my office that was just going through just that, and she didn't qualify because her husband was being offered insurance, but they couldn't pay the $700 to cover her and her son. They didn't have the money at the end of the month to pay for it, and she asked, what do I do? and we haven't found any programs to help those people yet.
Now, could she get her own individual plan, or because she's married, does that mess her
Oh,
up?
oh no, she can get her own individual plan, but again, she didn't have the money to pay for that because it was going to come out very expensive for them.
Now, what happens to people, let's say last year I made a lot of money, life was good. I got sick, I had to stop working, I'm going through all this now, I have no more income.
Right.
Or I'm just getting state disability or something. What happened, how would that work? Because now they're no longer, I'm not making that 80, 90,000 a year, now I'm getting $400-500 a month.
Right, and that's where, when I'm entering all the information in the system, I'm putting what it's currently going on, and it does ask on there too, if you project a difference
Okay.
coming up. And what I let my clients know, if during the year something changes, if you lose your job, or if you get a job, or if something happens, you have 30 days to notify Covered California. Come into my office, we'll notify them of there's a change because your subsidy will change. But many, they're losing jobs, they're going on disability or whatever it is. So there's a difference in income from what their taxes were. And we put down what is going on currently because what we're looking at is projecting what their 2014 end of the year income would be. That's what the projection is for.
Now, people who get, like a lot of veterans, they get disability through the VA, and they
Yes.
have they can get health care through the VA.
Yes.
But if they go to LA, let's say I don't want to go to LA, I need something here locally, how would that work for someone like that?
Well, that's me. I'm not disabled, but I do have veterans benefits. And many veterans don't know. We have a VA clinic here in Oxnard. And it's over here behind Gold's Gym. And that's where my primary care physician is. Now, if I needed to have something else, then I'd have to go to Sepulveda or over to West LA. But for the most everything, I get it done here. If you have the VA benefits, you don't have to apply for the Affordable Care Act. If you apply, you're going to pay the whole thing because you have approved coverage.
Now, now you get VA benefits.
Yes.
But you also have a family who can't go to the VA, obviously. So how would that work for veterans with families?
Well, it's interesting in my case because I have the VA benefits. My son was on the Healthy Families and he got transitioned to the Medi-Cal. My father-in-law, he's 81 years old. He's on the adult Medi-Cal. My wife and daughter, we have to buy something through Covered California for them, and we've already done that. So so all of us are in different plans, and and it's coming in separately. So in a family, it can be that diverse, and that's where coming into to an office like mine, and there are several, but coming in an office like mine, we find out where everybody fits, and then but still, the rest of the people in the family, their information has to go on that app. Otherwise, it will change what you think your subsidy would be.
Now, there's been a lot of things going on that there's no security, that anyone can access my information. There's been fake websites going out. What should someone do to protect themselves from that?
Well, what you need to do is go on the Covered California website, find out who the certified insurance agents are, because I agree with that. That's one of my fears, is they're just contracting people to go out and get information, and they're not screening them. So, I mean, everybody that will, and I have mine, we have on here where it says certified insurance agent. We should have it on our business cards. Some may not have done it yet, but I went ahead and put it on mine, certified insurance agent, and the Covered California logo. And the reason why is because we're the ones that have been approved through the Department of Insurance. We've gone through the whole training for it that they require. So theoretically, we're all knowledgeable on it. And so we know how the system works. So that's what you need to do, is make sure the ones you're going to, that the state has approved as an insurance agent.
And the covered site would tell me that.
Right.
So I can just go there, find out an agent, and then go to their office and do my business.
Right.
Okay. Well,
Preferably mine, though.
Preferably his. So I'd like to thank you for coming on the show. If you would like more information, feel free to stop by his office at 141 South A Street, right here down the street from BG's Cafe in downtown Oxnard. Get information. Make sure you and your family are covered. Don't want you paying $165 fines. And again, if you'd like more information, you can email me directly at tabletalk805@gmail.com. Or feel free to check out my Facebook page, Facebook.com/Table Talk 805, and we will see you next week from right here downtown Oxnard at BG's Cafe. Thank you.